Well, we all try and do our best to save for the future, but one thing we can't control would be an economic recession, really. Some experts warn that the next one may not be too far off. Cory Sickles is here to talk about how you can shield your retirement portfolio from that possibility. He, of course, the president of Safe Harbor Retirement. So good to see you, Cory.
Good to see you, Robin.
All right, so let's get started. I feel like the stock market has been kind of questionable lately, so I feel like that's where people are kind of thinking, oh gosh, is that going to, cause havoc in my portfolio? So what are we kind of looking at?
Well, you're exactly right. We have a lot more market volatility right now. And I think one of the best things that you really can do is you need to kind of step back and say, am I actually invested the way that my risk should actually see it?
Okay.
Right?
Yeah.
I mean, one of the things that you want to be able to do is be able to handle risk. That's one big part of it. But one thing that you'll notice is as we age and as you get closer to retirement,
right,
you're going to find out that you get a little bit more conservative, and you really need to make sure your portfolio is kind of following you. And the best thing to really do is rebalance your portfolio every so often.
And what does that mean exactly? So, I mean, some of us are very hands-off, right, on our portfolio. Should we be more hands-on? Should we,
You really should. In my job, being a financial advisor, my job is to really work with my clients, and I really need to reach out to them and say, you know what, we really need to sit down and look at maybe possibly rebalancing your portfolio.
Okay.
If you look at it right now, the market's pretty, it's up about 20% for the year. You hear news about the recession, and you have an election coming, you have all these type of things.
Right.
And
yeah.
sometimes what you might need to do is rebalance. Especially, right now might be a good time for that. Just take your gains, rebalance, but more importantly, you need to really make sure that it's just looking at what your current risk level is to make sure you're still there.
And when we talk about recession, the possibility of that, is there really a way to kind of recession-proof your portfolio, or where does that stand as far as kind of making it as safe as possible?
Well, diversification is really what we're kind of talking about, and it's not only just like making sure you have international and you have all this, U.S. and maybe emerging markets. One of the things you want to also look at is your different asset classes. You want to make sure that everything's not correlated to the market.
Right.
So one of the things we try to look, when we start looking at our clients, is you want to be able to have different asset classes, so that can help you, if the recession does come, or if the market does take a little bit of a hit. And
another kind of thing that you always advise people to have, I mean, in any case, is an emergency fund, right? If something were to happen and you have this as part of the planning process, where do you start when it comes to that? Is that involved in kind of the portfolio building, or? I
think it is. I think it's very important. When the market's good and things are going good, the best thing you can do is have a plan. I always preach about you need to have a plan, and you really need to have an emergency fund plan.
Right.
And one thing you really should try to do is have 3 to 6 months of whatever your expenses are available to you in case you do lose a job or something does happen, where you're going to be able to, pay those bills. It's also a good time to maybe pay down some of that debt, so you don't have all the, those other expenses that do add up.
Right.
Because you really, if a recession does happen, you want to make sure that you're just paying the bills that you really need to be able to pay.
And I think we need to plan even more so now, especially as we are living longer, and women outliving their husbands in many cases, right? So, I mean, like, these kinds of things are all kind of played into that, right? And obviously you're very in tune with all of the things you have to think about.
It is. People are living longer, and one of the worst things that you can do is if, say, the market does dip 10 or 15% really quick,
right?
The worst thing you can do is get out of the market.
Right, just that reaction.
Yeah. But the majority of the average investor, I'll just say this, they usually actually buy high and sell low.
Okay.
And one of the things that you really need to do if the market does hit, now you really have to stand your ground. But it's back to what I said earlier. If you're balanced the correct way, if your portfolio is at your risk level, you're going to be able to handle that when it does happen.
I was just going to say, is there anything, as you're looking at a retiree, if the markets do dip, and we're looking at this, as a retiree, is there anything they should do immediately?
Well, the one thing is hopefully you do already have some type of a plan in place. The most important part when you're retired is to have the income coming in.
Sure.
And one of the things that we try to stress with our clients is to look at a different type of alternatives out there. You want guaranteed income. So, you know, pensions, Social Security, annuities are a good way to be able to put your money in as an investment to make sure you're getting that monthly income coming in on a monthly basis.
And Cory, you are always available for a complimentary consultation and offer that to our viewers as well. So come in, and you have 2 offices, correct, Cory?
We have an office in Dublin, we have one in Easton.
Okay.
And again, if you just call the number, you know, the 614-760-0670, you can have a complimentary, no obligation meeting with me.
All right, Cory, thank you.
Thank you.